Hey everyone, and welcome to another episode of The Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael. We're excited you joined us for this adventure.
So today's very special guest is Bronson Hill. Thank you so much for joining us today.
Wow, that was quite an intro. I feel like I need to get up and do some jumping jacks. Woo, yeah, let's do this. So yeah, I'm excited. Love talking to you. I'm excited to talk with you guys, the adventures in real estate and just, ways you can, get your time back and become a passive and other types of real estate investor or other types of investing. So let's do it.
Yeah, no, we're super excited as well. I mean, it's super cool to be able to follow you in your journey on social media, right? Just because we are so very far away. But so it's really been a pleasure. So we're really excited that you're here with us. So thank you.
Thank you. Well, I'm excited to be here. So that makes three of us then.
Yeah.
And hopefully somebody's listening. So there's at least four of us.
Yeah.
Somebody, my mom over this.
Awesome.
Bronson, would you mind sharing with our adventurous family a little bit about your background and why you started investing in real estate?
Yeah. So I was a well-paid medical sales professional. So I worked in surgical settings, wearing scrubs and going in consulting heart surgeons on how to use their medical heart surgical devices. And it was rewarding. I enjoyed it. It was great. But I was getting paid really well. I was making over $200,000 per year. But I realized I didn't really have freedom over my time. And as hard as I would work, I'd kind of get a slap on the back and say, hey, great job. Let's go out and do it again next quarter and sell more this time. And so it's kind of this perpetual rat race of just having to go out and having to actually do the work. And I realized I was in a time for money trade. Like a lot of the physicians that I work with, some of them were paid very well, but they could never get off of that hamster wheel. So some of them were working 60 or 80 hours a week, getting paid great, but they couldn't really ever step off of that. So to me, I started to think I really wanted to try to develop a way to generate passive income. So I didn't tie up my time, because you can always make more money, but you can't make more time. And so what I realized is, as I started investing in real estate, and I started actually with single family, and then realized it was just going to be so much work and it just was going to take a lot longer, and there really wasn't the cash flow that I thought. And so I have a friend who does multifamily real estate. He's like, hey, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And he said, you can raise the money. So I just basically read every book that I could find on it. I ended up starting a local meetup in LA. This is about 4 or 5 years ago. And since then, I've raised 25 million for different multifamily deals. And we have about 200 million in multifamily real estate assets. And I was able to leave my great corporate job last July from the golden handcuffs and be able to be a full-time real estate investor. So I'm just loving life, loving everything I'm doing. There was actually a moment I was sitting right where I'm sitting right now. And what came out of my mouth was, I was thinking about the month end, the quarter end sales job. And I was thinking, thank God I'm not doing that job anymore. And that literally came out of my mouth. So that was a really good sign that I'm actually doing the right thing. So it's been a lot of fun.
No, and I love that. Even like the story that you told at the end, it makes me think. I was in like my Go Abundance pod the other night, and somebody in my group has recently left their job. And she had said, like, from my work window, right, I always watch, women like on their way to yoga or to the gym at like 10, 11, 12. And I was always like, what are they doing? They don't have it. Like, what's going on? And now that she's left, she's like, I went to a yoga class at 11. I was like, look at you, it's cool to be able to like look at it, that different way and be like, wow, like I'm either really like, you're just super happy to be in the position where you're not doing what you were doing before. And that is just, it just warms my heart. It's just new, a lot of that's coming out right now because it's just cool, right? To be able to like have all those feel goods.
Yeah. It really gives you control over your time. Like today, before, we did this, I actually, same about 11 o'clock, 10 o'clock, went for a run. I do my 7-mile hill run once a week. And so I train for Spartan races. So that's something that I enjoy. So it's kind of some people would say it's like torture or punishment, but I personally enjoy it. And anyway, but I was able to do that midday, and it's great. I can kind of have control over my schedule. It's not that I'm not working, but I can work in the way that I want, how I would like to, with the people that I'd like to. So it gives me more freedom, and I've been able to travel a lot. Even since July, I've been to Iceland, went to Cabo, went to Cancun, went to El Salvador, Estonia, and I'm headed to Belize and hopefully Patagonia later this year. So anyway, just the ability to have more, time to do what it is you value, whether it's spending time with family, traveling, or really pursuing those worthy causes that you feel are more important than just making a paycheck. So it's exciting.
It is exciting, except you forgot to mention England, so I'm kind of offended.
Well, I'll come visit you guys. You let me know. I might just come and visit you. The flights are not that expensive right now internationally. So
Right?
you're like, guys, I'm here. I'm at the airport. What do I do?
Right? Actually, crazy. Sorry, this is literally small little sidetrack. To get from here to LAX is cheaper than like anywhere else in the US because my parents live in Southern California. So that's where we fly into. And I'm like, why? You know?
Yeah, it's been crazy. Like, I've gotten some ridiculously cheap flights. There's these services that let you know about cheap flights. This doesn't really have anything to do with real estate, but it has to do with lifestyle. But
Yeah.
I found a trip to Estonia, which is Eastern Europe, for $265. And this was in January. And then El Salvador from LA was direct. It was $150 round trip. So, and it is amazing. I paid more to go to Dallas and more to go to the Bay Area from LA and then to go to some of these big international trips, which is so weird. But I think it's just kind of a weird time right now. A lot of people don't feel comfortable traveling internationally, but traveling locally, that feels much safer. So it's kind of interesting how people, have their own perception of what's safe. So
Totally. But even with flexibility, right? And then I'll let Michael go. Like we now like have a more flexible life where it's not like, oh, okay, I can only travel, like during spring break or this like 1 week that I get off. And so I have to go to like my second cousin's brother's mom's cat's wedding. You know what I mean? Like,
yeah.
it's just that like you finally get to like kind of go when you want. I mean, yes, we all have responsibilities in the background, but like knowing I can check emails from a different location is huge.
Yeah. And that's really, I think COVID has changed that for a lot of people, just being able to work remotely. But I think the amazing thing about passive income is just this week, I got my direct deposits, multiple thousands of dollars from different investments that I have, which is great. That comes in no matter where I'm at, no matter what I do. And I don't have to do anything. Once I've, vetted a deal or I've vetted a sponsor or if I'm a part of that deal, then basically the deal performs. And as a passive investor, you don't really have to do anything, which is great. So it does give you the flexibility to be where you want, when you want. And I think that kind of comes down to the lifestyle design, right? That's kind of why we do this, is we want to have control over our time, our location, and be able to live the life we want to live. So it's exciting.
Could not agree with you more. That's really cool. But I wanted to say, when we got on the sidetrack about the flights and everything, like you said, you do the Spartan races and like we train for that and like they'll run stuff like that. That's really cool. And there's a bit of sidetrack that I wanted to take earlier is because, you said it was torture or people think it's torture for you. Like I like to torture myself in the gym as well. Crazy like HIIT workouts and stuff like that. And like it brings me back to a quote from Marcus Aurelius. It says like, treat the body rigorously so it's never disobedient to the mind.
Yeah.
And that makes me think of your like cold dive dip with Bill Allen act.
Oh yeah. Yeah, that's right. Yeah. We were talking so I started doing ice baths. That's a whole nother story, but ice baths, there's this guy named Wim Hof who does these, crazy obstacles and climbs to Everest only in his boxer shorts and boots, which is crazy. But yeah, I've started doing ice baths and doing things that are difficult. And interesting. It's so interesting how we condition ourselves for what we're going to do. Because we know like today, I was like, I know I have a really hard workout. I do this once a week, whatever. I've been doing it since January. I've been trying to do it once a week. And I tell myself, it's always hard. It's always hard every time. But then I was reminded of this Jim Rohn quote. Jim Rohn is a motivational speaker. And he said, easy is it can be done, but hard is you can't do it. And so I realized, I should just say this is an easy run, right? Because I know I can do it. I've done it many times, but sometimes if we build it up to be harder than it is, like the hardest part of it is like probably the first 10 minutes. But if I just say, it's easy because I can do this and I go for it. But it is amazing how fitness and other goals, they translate into energy, like more energy for other things, as well as, maybe ideas that come out of it. Also, like if I can sit in an ice bath for 4 minutes, or if I can run up that hill and back in an hour, like what's not possible today? I can use that energy and I can use that success to move into other areas of success, which is really awesome. So I feel like that kind of spills over to different areas. So I'm a big fitness guy for that reason.
No, it's totally true. And it even goes like into real estate, right? Because right now people think real estate is crazy. I mean, people thought about that.
It's hard.
Yeah, hard. Like it didn't matter what it was. Like it'll be a new excuse over and over and over. But even now, like there's low inventory. The interest rates are too high. Like
inflation's going crazy. Yeah. Now's not the time to buy. Like all these things.
Yeah. People they come up with excuses of why we shouldn't do things. And I think there's never been a better time. I think I looked at, the numbers I've been putting together this guide on inflation about how to take advantage of inflation. Yeah. And basically 40%, there was a 40.9% increase in the physical and deposits, money supply in the US between February of 2020 and February 2022. So that just means in general, everything's going to cost substantially more and is not going to be transitory. There's no way to like kind of put this money once it's been created kind of back in a box somewhere. It's just
Right.
so anyway, but you're right. There are always excuses. There are always reasons why someone can't do it or, I'm too busy or whatever. It's just like, if you do it, and like you guys, you make the time and you do it. And if you just make the time, you go to the events, you read the books, you learn, you do the networking and the education that'll get you there. It's just amazing what doors can open.
Yeah, with your experience and background right, in real estate, having 200 million in assets and things like that, like I'd love to hear your perspective on what we consider now rising interest rates. I mean, like, yes, they're going back to where they were a couple of years ago, but what are your thoughts on that? And still the prices being higher than they were pre-COVID time, things like that. What are you looking?
Yeah. There's a lot of factors. So you have kind of the inflationary factors and the deflationary factors. And inflationary would be it created a ton of currency. Asset prices are high. There's a lot of, I mean, even inflation itself can be an inflationary thing because it leads to more higher prices and more other things. Deflationary could be that, interest rates are rising. So what happens as interest rates rise? Typically asset prices fall. But I think the one thing that changes for multifamily is that, rents typically keep pace with inflation. So no matter what interest rates do, it's my opinion that I think rents are going to continue to rise. So if rents continue to rise, like we do a lot of stuff in Jacksonville, Florida, we've got a number of properties where we've seen, we're buying them and they're, $900 average rent, but we're seeing our other properties in, around Jacksonville where we're getting like $1,425 for those same units, but they're renovated. So it's over a 50% increase in the rents. And of course, we love those markets because they're growing. There's so many people moving in there. And so when you have areas where you see a lot of population migration, where you see a lot of business friendly and landlord friendly and no rent controls and things like that, it can lead to a lot of potential upside. But I do feel like, if you invest in REITs or you invest in kind of some other, types of real estate that's a little more anonymous, or maybe it's crowdfunding, I will say this is a value add approach where somebody comes into a working class apartment, does some renovations and improves the value, meaning we're putting $10,000 in per unit in Jacksonville. We're hoping to see rent increases conservatively of $250, $300 a month, something like that's a very tangible thing that you can see. Now, the value of multifamily properties is all based on the income. It's not based just on comps like houses where this house sold for this much, so then this house is going to sell for this much. It's typically more on income. So if we can dramatically increase the income, we increase the value. So even if the valuation comes down a little bit or comes down, over time, we're still, or because of interest rates, we're still continuing to increase the rents over time. So I think it will at least balance out. I do think because we're 6.8 million apartment units short in the US currently too, there's just a huge demographic behind all of that as well. So again, you have inflationary and deflationary forces. And I think over time, the long run, I'm thinking, inflationary is really going to win that just because of the spending, the demographics, and the shortage of housing.
Can agree with you more. Yeah. I mean, I think the same. And I think, even though prices are staying higher, or they keep increasing, but interest rates keep increasing, it's just because I think rents, just like I agree with you, like rents are going to continue to increase as well, just because inflation is going up. And it's like, what, 8%, 8.5% or whatever last month, and it continues to rise, right? So like, yeah.
Right. Yeah. And I think single family and multifamily are a little different. I think single family could have a dip because of affordability. I think there's a difference because I think if rates rise, people can just afford less of a house. But people think of like, I'm sure they talk to you and, other people in real estate, like, oh, how's the real estate market? Like it's one market and one location, just everything's there. But you think like real estate it's not an asset class, right? It's like, are you talking about single family or are you talking about in the city, talking out of in the suburbs, in the country, what state, just so many different things, multifamily, self-storage, it could be triple net. There's so many different things people are doing and it's all very different. So I do think, like you said, multifamily, the future is very bright.
What else are you like most excited about then with multifamily, if you think the future is very bright?
Yeah, there's a lot of things I love about multifamily. I call it kind of the gateway drug to passive investing. Something that once people get started, and I've had over 1,200 one-on-one calls with high net worth investors, average net worth over 2 million. And I see it like multiple times where people, they've never invested. They're kind of into Wall Street stuff. And we're taught that traditional investments or stocks and bonds, which in my opinion are incredibly risky and they're paper assets. What do you actually own? Because if there's some sort of panic or crisis, you could lose a lot of value or lose all your value due to counterparty risk and just volatility. But with multifamily, people, they start investing a small amount. It could be 50 or 100,000, which for some that's significant. For some it's not that much. And then they get the experience of investing in a deal where they see the tax benefits, which are substantial. Either, reduce taxes, sometimes you can defer taxes or even negate them altogether. And that's a way to keep more money. You're making more money, you keep more money, the returns are better. So you get just a really great asset that is something that is going to be in demand. It just doesn't have the volatility of some of the other stuff that's out there. And then, I think for the long run, having the confidence to know that you can grow your wealth without the volatility and without you having to actively manage anything, right? So you actually, when you're a passive investor, your job is to vet the deal and you vet the sponsor. And if you feel good about the deal sponsor and you feel good about the deal, by investing a small amount, you're looking to develop a relationship. And then I've seen people where they invested, some money into one person or a couple people's deals, and then they start to feel much more comfortable with it. Like, wow, I really generally know from this asset class with the value add approach, maybe I could double my money every 5 to 6 years. I'm not speaking about any specific deal, but that's not an unrealistic expectation. We're having some stuff that's going way ahead of that. We're doing some crazy. We had a deal in Jacksonville that we bought it for $27 million. It was a 288 unit apartment complex. We bought it in March of 2021. We sold it. We planned to hold it 6 years. We ended up selling it in December for $37.5 million. And it's because we're just total geniuses. No, it's not. It's because of inflation. It's because of the market. It's because of when you're using leverage as well. So we only had to put 25% down. So you have an increase in the value. You dramatically increase the value of the equity, So there's so many advantages of it. I think but again, for many people, it feels very foreign because they've never done it or they don't know anybody that's done it. But then once people the light goes on and they get it and they try it, it's amazing when they really get excited about it. So I think that's the most exciting thing for me.
No, that's awesome, right? Because once it does click for someone, it's like, ooh,
Yeah.
It's just super exciting to be able to share that common excitement because it's huge and it can do so much. I mean, a lot of times, right? I don't know who people think an investor can be. It can be anyone, right? For any reason. And so that's the greatest part too. It's not just, super high net worth individuals who are investing, right? Everybody started somewhere in their journey, at all different places.
Yeah. Yeah. No, it is something that, again, for a lot of people, it's just amazing to me how, the financial community, I used to be I call myself a recovering investment advisor. So while I was doing, the medical sales, I would do some investment advising on the side. And I realized Wall Street's kind of set up to just cheat people. I mean, it's set up to really, and that sounds really harsh, but Tony Robbins came out with a book and he said the average mutual fund will say their fee is 1.2%, but there's all these hidden fees they don't have to legally disclose. And so it ends up being about 3.2%. Mm-hmm. Yeah, that's most of your returns. Typically stocks return 4 to 7% per year if you count the down years. And so, and it's interesting too, right now stocks are very in favor. They've done very well. But if you look back historically, 1929, 100 years ago, stocks were really hot and then they crashed and they didn't get back to where they were from 1929 for 25 years.
Wow.
And so there was a time where people were like, stocks, why would you ever invest in those? Oh my gosh, it's terrible. But Wall Street has done an amazing job of just marketing to people that they're really safe, solid, traditional investments versus, again, what do you really own? You own maybe a piece of a company. But if you look at the valuations and what you're actually getting versus actually owning something real, that's productive, real estate, that's actually income real estate. So yeah, I'm not saying, people should not be invested in stocks or not be invested in other things. I'm pretty diversified. I have a lot of different things that I do, but I think that, most people that, 98% of people that should be doing this are not doing it because they haven't heard about it. They just don't really know about it. It feels like it's just this other thing. Why would I do that? Right.
Right. I still have conversations with people I grew up with who, they were like, well, no, my financial advisor says this, and it's like, do you really understand all the fees? Like we were just mentioning, all the fees, everything that go into all these investments that you're making, right? You're actually not getting the returns they're telling you are. It's things like that. It's why don't you invest in something more tangible, a hard asset, right? And but you have control over as well, passively investing in, multifamily real estate, for example. You have complete control over it because you can do the vetting yourself and everything like that. And you can choose which investments rather than just giving your money to a firm who's just going to take that and invest in whatever they think is best. And try returns that they've said or promised. So.
It's also kind of too, when if you go to a car lot and you say, hey, what do you think I should buy a car? They're going to tell you, yeah, sure. You look great in this 1970 Buick right over here. It's like, they're incentivized because, for them to, and again, you could make the case and say, well, we're incentivized as well. But for me, it's not as much of a deal. Like, I don't really, I mean, if people invest with us, that's great. But I just rather have it invested in the asset class because
Mhm.
it's going to be so transformative to get out of Wall Street and into Main Street. Wall Street advisors, their whole thing is like to try to just, get you to buy and hold and manage, you during the dip so that you don't sell and everything. And I get it. Like, and there's some merit to that. But on the other hand, a lot of, financial advisors, it's more of, managing your investors, right? It's just trying to make sure everybody, you're calling people back. And it's just, we're putting a lot of faith in a system that is shown to be very volatile over time. So I don't know. I think there is a time to buy stocks. I think the average price earnings ratio is something I could butcher this, but I think it's like 35 or something like that right now, or it's very, very high when the historic average is about 16. And that means for every dollar of earnings, how much are you paying? So right now people are paying $35 to get a share that gives them $1 of earnings, when historically it's been $16 for $1 of earnings. So we're at very high kind of bubble territory when you look at actually how much people are making, for how much actual returns are coming from the stock market. So a little bit of a side note there.
You like that side note. Where do you find, or were you going to ask something?
Good.
Where, like, because I'm sure some people might, be skeptical. Where are you like finding a lot of this information, like learning more about it? I guess that's that.
Yeah. Yeah. So I do a lot of reading. So I made a goal a few years ago to start reading more books. I think my first year I read maybe 70 books. Last year I read 50 some books. This year my goal is 60. So I've read 23 so far. So a lot of times, like, this stuff, it doesn't really change. I think, a lot of times we think we're really into the news, which is good. But if you look at history, they say history doesn't repeat itself, but it rhymes, right? So there's going to be similar things that happen. I think Winston Churchill said, the further you look back into the past, the further you can see into the future. And so all this stuff, nothing really is new. All these things they're talking about today, and a lot of stuff, we're kind of really shifting. A lot of things, at least in the US, is kind of shifting kind of towards socialism. I don't know how else to say it, just really toward government support of everything. This stuff has all kind of happened before. And so when you look at all this, but I think the challenge is, if you were a real estate investor, or you just invested in stocks in 2008, you could have gotten really destroyed because you were only paying attention maybe to that asset class. But some of the groups that I've run in, and some of the folks that do now, they've started to really shift to say, let's not just look at real estate. Let's look at the global economic picture, right? Because it's changed. We've never had a time that I can think in the last 100 years where they've created 40% of all the currency in over a 2-year period. That's insane. And so it's going to look very, very different. So there's a lot of these trends that are happening. And I think when you listen to people that are kind of paying attention to this stuff, or maybe they're pulling things out that's like, oh, hey, well, I didn't even realize that. So we do these investment panels. We do one on multifamily once a month. We also do one on inflation, kind of on the opposite months, and just talking with experts about, what do you see happening right now? And the biggest question really is, what should I do about it? Right? Like, okay, all this stuff is happening, but what are the moves, or what are you personally doing? And so a lot of people are either trying to get it as much into real assets as they can, or other people are basically holding on to cash, hoping that there'll be a buying opportunity coming up. So, I also do a lot of physical metals. I buy, physical gold and silver. I feel like that's a hedge against stuff. I was really opposed to it, but I just recently started buying some Bitcoin and having it off an exchange. And so there's different, strategies people do, but the more you talk to different people, and that's the power of networking, you're going to just come across different strategies, and you might find not all of them are for you, or it may take you some time to come around to them, but it's just a way you can really learn from other people's experience also.
Thank you for that.
This has been a great conversation, Bronson, and I wish we could continue on. However, we're moving towards the end of the show, which brings us to our adventurous 4. These are 4 exploratory questions we ask all of our guests. So the first question we have for you, Bronson, if you're ready.
I'm ready.
Let's do it. Where is one place you wish to travel to, and why? I know we talked about a bunch of different places at the beginning.
Yeah. So I'm actually combining. I have the list here, but 1 and 2 is like the bucket list. So these are kind of 2 together. So I was planning to go when I turned 40. This was a couple years ago when I turned 40, to go to New Zealand, to go hike for 3 weeks around New Zealand. And of course, COVID happened, and they were like so locked down for so long. So I wasn't able to do it. So that would be probably both my favorite place I'd like to travel. I've been to 39 countries now, but that's one I'm hoping to go to. And then also that would be a bucket list thing, just to be able to take 3 weeks and just go explore, just go kind of get off the grid and just go do a bunch of hiking and have fun in a beautiful place.
Right. Because even like to tie it all in with the bucket list part, right? Like being able to leverage real estate investing, because as you mentioned earlier, right? Like your passive investments come in no matter where you are. Like the real estate like just being an active investor in general gives you the flexibility to be wherever you need to be. Like it doesn't, I mean, I guess in New Zealand, you'd probably wake up a bit earlier but to chat, I guess, with people in LA, but it works.
Well, I also think kind of going with what you said, being able to take more time off. They did a study and they show that the average American takes 13 days off a year, including sick time.
That feels like a lot.
And, but 13 days, it feels like a lot, except when you compare it to Italy, which takes an average of 42 work days off a year. So that's an average. So 13 versus 42, almost 8.5 weeks if you count, weekends and everything. So anyway, it's the idea of being able to take more time off too can actually lead to more energy and more creativity when you come back to the office. So anyway, that's hopefully I'll come back on your show again in a year or something, and I'll be like, I did it. I went to New Zealand for 3 weeks. So it'll be fun.
No, and it's so true. Like when I first worked over here, they're like, you have 25 days off, and then from Christmas to New Year's, we're closed. And all of the first week of July, we're closed. And then you get all the public holidays. I'm like, cool. My last job, I had 5.
That's awesome.
It just blows my mind. But then we can go to the third question then, which is, what is one piece of advice you have for someone who wants to start passively investing in real estate?
So I think there's really 2 things at our meetup we talk about a lot. And they basically it's networking and education. The first thing in networking is, if you get to a local meetup or you go to a conference, I know I saw you at a conference recently, Susie, and you're just going to meet people that are doing really unique things, or maybe they're involved in real estate in ways that you didn't even know you could be, or they'll open up a new idea to you, or maybe there'll be an opportunity to work with them where you can provide value. And that's kind of how it worked for me, is that. And then also in those same meetups, you'll get some education. There's somebody that are speaking about a topic, or maybe, like I mentioned, through books or through, YouTube University. There's so much out there that you can, all these different ways you can learn will really open you up to opportunities. So Brian Tracy says, if you want to earn more, you got to learn more. So, and I think it sounds really simple, but Tommy Tremendous Jones, another quote here, he said this: you'll be the same 5 years from now, except for the books you read and the people that you meet. So it's kind of the same thing of networking and education.
I like that. It is.
All right. So the fourth and final question we have for you, Bronson, is, if you had unlimited resources available to you, how would you leave an impact?
Yeah. So my big why, really in, what I'm doing in real estate, because I think it's important to have a why that's beyond, just travel or Mai Tais and yachts and other things. Like, some people have this idea, I'm just going to just do nothing when I real estate. And that's fine. But a much more powerful driver is having a stronger purpose. And so for me, it's really today in 2022, there are 20 to 40 million human slaves today, which people don't realize that human slavery didn't end 150 years ago. It's actually more prevalent today than any other time in history, and it continues to get worse. And so, for me, just, creating awareness, trying to stop, there's different forms. There's sexual human slavery, there's labor slavery, there's I could tell you lots of stories of ways that exist. But to me, that's really what I'm trying to do, is to end that. So I'm involved with an organization called December.org. And it basically, people wear, bow ties, or women wear dresses in the month of December to raise awareness and money for human trafficking. And they've raised, I think, about $20 million over the last 7 or 8 years. So that's an organization I'm serving on the board on. But yeah, so that's really my big why.
No, I love that. Thank you for sharing that, because that's huge. And like, it's never talked about, right? Like,
right.
Not at the Oscars, not at anything, like when people actually start to get emotional, it's like it's happening and just not there for some reason. So thank you for that.
Yeah, sure. Yeah, absolutely.
So before we end the show, Bronson, would you mind sharing with our Adventurous family where they can learn more about you? We talked about your meetup and various other things where they can get in contact with you and just chat with you.
Yeah. So if you're in the LA area, we do a meetup on multifamily real estate. We have a pretty good crowd in Pasadena the first Wednesday of the month. Also have this report, which is the single best investing strategy during and after pandemic. It just talks about some of the unfair advantages of multifamily investing. You can find that at bronsonequity.com, or you can shoot me an email at bronson@bronsonequity.com. But this has been great, guys. I really appreciate it. Love what you're doing here. Excited to have you on my show as well. And just, I love talking about adventure and real estate. This is exactly what you guys are doing. So.
No, yeah. And thank you for joining us. It's truly been a pleasure.
Awesome. Thanks, guys.
Until next time, explore more, adventure awaits.
Woo!